All right, well, let's get started here so we can be respectful of everyone's time. This is such an unorthodox way for us to be spending time together on a Thursday evening, but I think that all of us have shown some resilience and the ability to make the best of what we've been given here. Big changes on my end, if you notice from the invite, is that the firm that I was with for the last 12 years ended up deciding to make a move last month and joined Vantage Wealth Management. Vantage Wealth Management is also located in San Mateo. It's a very similar design firm, except that it is what's called an RIA, Registered Investment Advisory Firm. Means that every relationship that we take on the role as fiduciary. I joined a group with my 12 years of experience. I'm the most novice. I think the next person is 16, the next person's 19 years, the next person is probably close to 30, and the next person, I guess another guy is in his early 20 years of experience. So it's a very seasoned group. We have a lot of the same tools that were available as before, plus many more. I encourage you once the world settles a bit to come by and see the office. We'll definitely still be planning on attending the general meeting so I can talk to you there as well. But it's a good opportunity. Become a managing partner there. One of the senior advisors will be retiring at some point, so I will be able to help him in his succession plan for those clients as well. But it's a really good group of people that have tons of experience with great tools available. So my relationship with the Dental Society is hopefully going to stay very similar. I don't see much change there. And tonight, what we have for you is that the PPP loan program is something that is probably affected everyone on this call and this video, and many more of the dentists in the area. Most of you will qualify very simply and hopefully have taken advantage of it. But if you haven't, Larry here will explain how you can. So I just want to say thank you for your continued support for me and my new home. And also, I'd like to introduce our speaker, Larry Pond, who many of you have spoken with before. I've hosted.
Hi there, I'm Larry Pond. I'm here in River Shores next to your old San Mateo Dental Society office. I'm in the same complex and it's going to be torn down in a few months. So I'm enjoying this as much as I can. So I don't know if all of you have met me before, but I've spoken before at the fish market and also at Drager's. So giving you tax updates. And I hope to keep doing that for you again because we're expecting more changes. Changes are coming. So lots to talk about in the tax world. A lot has happened this year, right? I mean, who knew that we were going to have a pandemic? Who knew your office was going to be shut down? Who knew that was going to happen? Who knew you're going to have to buy all that plastic to cover up your office and all those kind of things? So we went through quite a bit, haven't we? So anyway, March 27th, Congress issued what's called the CARES Act. And that was like a $2 trillion or $3 trillion piece of legislation. And part of that was the Paycheck Protection Program. So that was the original intent, was to allow people to still keep working. And that was a big deal because to keep them off of unemployment. How that work out, right? So anyway, so by being able to pay people, they authorized $349 billion for the PPP loan. That disappeared in a couple of weeks. And then Congress had a second round of funding for $310 billion. And as of August, there was still $128 billion left. Well, the window closed for new PPP loans. We had until, it was extended to August the 8th of 2020. The deadline was supposed to be June 30th of 2020. So, no more SBA loans right now, as we can tell. The SBA has approved over 4.6 million loans for about $513 billion. So that's what's out there. And on June 5th, the president signed a new law called the Paycheck Protection Program Flexibility Act, FA. And what that did was it liberalized the qualifications for forgiveness. So that was incredibly helpful. And then they updated the forms, the SBA form 3508 and the 3508EZ, which is the loan forgiveness forms. We're still needing more guidance from the SBA because there's a lot of unanswered questions, which I'm sure some of you will have. And I can officially say I don't know some of those questions. So what changed with the Flexibility Act was that originally, if you got a PPP loan, you could not take advantage of the payroll um, payroll deposit deferral. Now you can. And also, in terms of when you got to start paying it back, it's 10 months after the end of the covered period, either the 8-week covered period or the 24-week covered period. That's when you got to start paying back the unpaid portion of the PPP loan. So the payroll tax deferral was allowed under the Flexibility Act. Originally, if you got a PPP loan, you were not allowed to get the payroll tax deferral. So basically, you defer half of your payroll taxes until December 31, 21, and the other half in December 31, 22. And you can work with your payroll service provider to take advantage of this payroll tax deferral. Now, it's not a forgiveness. You still got to pay it. So for your cash flow planning, you got to make sure you got the money to pay it. And this applies for wages paid from March 27th of 20 to December 31 of 20. So who is eligible? You guys. Any business, basically. You guys were eligible for that. The only catch is you got to be in business by February 15th of 2020 and have fewer than 500 employees, which is all of you. Businesses that are not allowed, well, none of you are these, so I'm not going to even go there. You know, none of you are criminals, I hope. None of you are cannabis or had prior defaults. So they are not for everybody. But the maximum size of the loan is a lesser of 2.5 times your average monthly payroll costs, or $10 million. That's the biggest loan you can get. Now, the limit on payroll costs is up to $100,000. So if your employee is making $120,000, the calculation is based on $100,000. So that's what the maximum loan is in terms of the PPP loan. So at this point in time, you guys got your PPP loans. It's not going to change. But what goes into the calculation of payroll costs? So this is going to be very important when it's time to figure out the loan forgiveness. So the payroll cost is not just what you see reported on Form 941, the payroll forms, salary, wages, or compensation up to the $100,000 limit. Independent contractors don't apply, so they're not part of the payroll cost calculation. It includes the tips or anything like that. Any leave, vacation, parental leave, family leave, medical leave, or sick leave, that's counted as part of the payroll costs. However, if you want to take advantage of the employer tax credits under the Family First Act, you can't double dip. You can't count it as payroll costs and take the credit. So do the math to see how that works. Any severance payments, that's part of the payroll costs. Group benefits, that's health, vision, dental insurance. That's part of the group benefits, so that gets added to your payroll costs. And retirement benefit payments. So if you have a retirement plan that you pay into as the employer, that's part of the payroll costs. What's not part of that is employee contributions. So for example, if they're putting money in the 401k plan, taken out of their paycheck, that's not counted as a payroll cost. On top of that would be your state and local payroll taxes, your SUTA taxes. So those are the payroll costs. What's not part of the payroll costs is your federal withholding, that's taking out the employee's paycheck, and also withholding for the employee share of the FICA and Medicare taxes. That's not part of the payroll costs. Health insurance, that's a little more complicated. So if you're self-employed or you're a general partner or you're an S corporation owner employee, they don't count for you guys. So only for the employees, not for you. However, retirement costs for S corporation owners are eligible costs, and retirement costs for self-employed individuals or general partners are not part of the eligible costs. So it is a bit confusing. It is kind of hard to have this memorized. That's why I have a cheat sheet to keep track of which way it goes and what gets included. So so when it comes to the retirement contributions, the employee retirement contributions on behalf of owner employees are capped at 2.5%, 2.5 months worth of the 2019 contribution amount. So that's you can't front load it, you can't prepay it or whatever. So it's based on 2.5 months worth of the 2019 contribution amount. Now, if you look at the form, it's on the EZ form, but not on the full form. And I assume that's going to be one of the corrections in a later version of that application form, the loan forgiveness application. So besides payroll, the other costs that your PPP money can be used for and can be used to factor the loan forgiveness is rent. Now, rent only. So when you write a rent payment to your landlord, well, you're paying a lease payment, but you're probably paying a CAM also, common area maintenance costs. So those are not part of the lease calculation. So you gotta be really careful about that. Auto leases are not considered, so that's not part of the calculation. Any business loan interest and utilities, gas, water, electric, landline telephone, not cell phone, landline telephone, and internet. So those costs are counted, and utilities. So these are your permissible expenses besides payroll. So if you're self-employed, you're just a Schedule C. It's a little different calculation here. So if it's just you as the self-employed borrower, so we take line 31 of Schedule C, and when this slide was done, it was done before the July 15th deadline. So by now you would have to file your Schedule C, your 2019 tax return. So the limit for a self-employed person, Schedule C, no employees, is $100,000 divided by 12 times 2.5. So that's $20,833. So that's the biggest loan you can get if it's just you with no employees. If there are employees, you can factor their payroll costs also to boost up your PPP loan. You'll need to prove that you're in business as of February 15th. So that means showing some invoices, bank statements, or some proof that you're in business as of February 15th. So if you start your business after February 15th, you're not going to be eligible for a PPP loan. So if you're in a partnership, as a partner in a partnership, you cannot apply for a PPP loan. The partnership will apply for the PPP loan. That's how that works. Now, if your Schedule C is 0 or negative, you're not eligible for a PPP loan. If that's the case, you might want to consider the EIDL loans, the economic injury disaster loans. And they were closed for a while. They reopened on June the 15th. So for self-employed borrowers, the maximum loan is $100,000 divided by 12 times 2.5, $20,833. So there was a question of, do I have to pay myself out of the loan proceeds to qualify for loan forgiveness? The answer is no. The loan forgiveness is going to be simply based on your 2019 Schedule C. So the loan, whatever's not forgiven is a loan you got to pay back. And if you got the loan after June 5th, it's a 5-year loan. If you got the loan before June 5th, it's a 2-year loan. However, the lender and borrower can agree to change to the longer term, but they're not required to do so. So what are your chances of getting it to a 5-year loan? I don't know. That's a good question. The interest rate on the loan, if you still have an unpaid balance, is 1%. It's a non-recourse loan. There's no personal guarantee. So it's a non-recourse loan, no personal guarantee, 1% interest rate. Then the question is the covered period, right? So when the PPP loans first came out, it was an 8-week covered period. You had to spend the money in the 8-week period. Wow, that 8-week period came and went pretty darn quick, right? So the Flexibility Act was passed to extend the covered period to 24 weeks. So it's going to end at the end of 24 weeks or December 31st, whichever comes first. And this gives you more time to comply for loan forgiveness and other terms of the loan. So if you got your loan before June the 5th, you can choose the 8-week covered period or the 24-week period. So then the question is, what if I met my costs to qualify for loan forgiveness before the 24-week period is up or before December 31st? Do I have to wait till December 31st? No. So you can do it now. The portal to loan forgiveness just opened on August the 10th. But what you do is you go through your bank's portal, and most of the bank's portals aren't up yet. So that's something to look at. Stay on top of your bank to see when their portal's up and running. And I probably wouldn't be the first on the block to try. I will let other people go first and have them fix it. So in terms of loan forgiveness, so the loan forgiveness is a big deal. This is a brand new feature of an SBA loan. We never had loan forgiveness like this before. So if you can meet certain requirements, all or most of your loan could be forgiven. That's a big deal. I borrow 500,000. If I meet these rules, my 500,000 is completely forgiven. I don't owe any money back. So step one is to figure out the costs that the proceeds are spent on. And of course, those are those permissible costs. So you start with the payroll costs, the mortgage interest on business mortgage, rent on a lease taken out before February 15th, and utilities for service begun before February 15th. So step one is to accumulate the costs during the covered period, 8 weeks or 24 weeks. Step two is calculate any reduction in payroll that's more than 25% of the prior quarter. Very controversial calculation, very complicated calculation, but that's part two. Step three, is calculate any percentage decrease in full-time equivalents from the covered period versus these following periods. So from February 15th of 19 to June 30th of 19, or January 1st of 20 to February 29th of 20. So I assume you guys are all using payroll services. I hope you are. Don't do it yourself. Please, 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 please don't do it yourself. But a good payroll service will have all this data and they can run the spreadsheets for you. We're going to ask the payroll service to give us a calculation from February 15th to June 30th or January 1st to June 29th of 20. And also they can help calculate the reduction in payroll. So lots of spreadsheets, downloads and all that. Now, if you have a seasonal business, which I don't think you guys qualify for, you can either use those periods or a 12-week period between May 1st of 19 to June 15th of 19. So if you have a seasonal business, like you're a ski business or you sell Christmas trees or a tax business, whatever, right? And then step four is calculate any adjustment if any FTEs or salaries and wages were restored by December 31st of 20. So if you're able to restore your FTEs and your salaries by December 31st of 2020, no reduction in loan forgiveness. Originally, the law was June 30th, and that was a big problem, right? June 30th. So, and a lot of businesses weren't reopened. I don't think any of you guys were reopened, right? So it's being extended to December 31st. And then step five is to calculate the payroll costs for the forgiveness floor, 60% of costs used for payroll if you use the 24-week period, or 75% if you use the 8-week period. So there's a question here of 60% versus 75%. Why did Congress change that? Were they being nice? No. Congress is never nice, right? It's because the 75% rule was made up by the Small Business Administration. They made it up. They just pulled it out of thin air and made up the 75% number. Well, that's a problem, right? If you have a government agency making up numbers that was not in the law, because when the law was written, they did not put it in the law. So that would have created a lot of lawsuits. So to forestall those lawsuits, Congress put it in the PPP FA Act that the law is 60%. So that's why we have that. Don't make things up. Okay, loan forgiveness. The law, the CARES Act, says that if you have loan forgiveness, it's not taxable income. It's not including your income. So if I got a $500,000 PPP loan and that's completely forgiven, you don't pay tax on a $500,000 loan forgiveness. Generally, whenever you have relief of debt, you got to pay tax on it. So the law says it's tax-free. However, we're in California. I assume everyone here is in California. For California purposes, it's still taxable. That's the way the California law is written. So if you have the $500,000 loan forgiveness on the federal side, it's taxable for California purposes. However, California right now, I think they close in a few days. The California legislative session is going to end in a few days. So it'll be interesting to see what happens. Take a look at AB 1557, AB 1557. That's the law that would make loan forgiveness tax-free for California purposes. Governor Newsom already said he'll sign it when he gets it. So we'll see what happens, right? I'm not holding my breath. I work with the law that we know, not what it might be. Here's the other thing. IRS issued a notice called Issue Notice 2020-23. Well, what happened here is if you have loan forgiveness, well, the expenses that made up the loan forgiveness is not deductible. And Treasury Secretary Mnuchin tweeted that. For the first time in history, we had tax rules via tweet. Who does that? Anyway, first time in history. So the IRS followed up with a notice saying that if I had a $100,000 PPP loan, it was completely forgiven, but the $100,000 was spent all in payroll. Guess what? That $100,000 is not deductible. Now, this is going to be really tricky for taxes this year. Very tricky for taxes this year because your loan forgiveness, you might not find out about it until 2021. So what's going to happen? Is it going to affect my 20 taxes or 21 taxes? Good question. We haven't got an answer from the government yet. So, stay tuned. We got a lot to figure out. So the amount of loan forgiveness cannot be more than your loan principal, and it'll be reduced by employee reductions and salary and wage reductions. So that's what we got to look out for. That's where it's going to get really complicated. All right. So the use of funds. So generally, for those of you who've gotten PPP loans, you might have been forced to open a new account with a bank that you probably never banked at if you got at a different bank or your existing bank. Some banks force you to open a brand new account and they can track where the money went, went to the payroll or went to rent or whatever. So under the Flexibility Act, PPP FA says at least 60% of the loan proceeds have to be used for payroll, 40% can be used for business rent, mortgage interest, no prepayment of interest, and utility payments. And they clarified that the 60% rule is not a cliff. So if you use less than 60% for payroll, it's not zero. But that was a concern we have because under the PPPFA law, it said that. So, but the SBA administrator and Treasury Secretary Mnuchin says, no. It just means if you spend less than 60%, your forgiveness won't be zero. It'll be reduced. So here's the example of the loan forgiveness. So let's say I got a $160,000 loan and I spent $60,000 on payroll. So what's my loan forgiveness? I use $50,000 on interest, rent, and utilities. So my loan forgiveness is $60,000 divided by 0.6 or $100,000. So of the $160,000 that I got for a PPP loan, $100,000 would be forgiven. $60,000 will still be outstanding. How about I borrowed $100,000 and I used $54,000 for payroll costs? 54%, less than 60%, and the rest was for the qualified non-payroll costs. So the loan forgiveness here is $90,000, which is 54,000 divided by 0.6 equals 90. 100 minus 90 means 10,000 is still taxable. So 54 plus 36 is $90,000. That's your loan forgiveness. Your remaining balance is $10,000. So, it might be a good idea to do some math right now to get a budgeting plan to see, what will my loan forgiveness be? Will it be zero? Will it be 100%? Got to run those numbers to see. So, one way of avoiding a reduction in your loan forgiveness is rehiring your employees. Originally, you had to rehire your employees by June 30th. Well, a lot of businesses were still closed on June 30th, so that wasn't possible. So the Flexibility Act extended that to December 31st. And the other thing is the third part here about if you're able to return the same level of business activity as of before February 15th of 2020, but then you're shut down or you're restricted due to government regulation, they might be able to exempt you from some of this reduction. How to document this? I don't know. That has not been explained to us yet. I'm sure we're going to get some guidance on this, but personally, the way I would document this would be print out those health orders from the San Mateo County health officer. I forgot his name, the guy with the beard, and print out those health orders so you can document when you were shut down, and you got the social distancing issue and all that. So we got a lot of compliance issues to deal with. So if you try to hire a laid off employee, but they refuse to come back, Document that. Document it in writing. Don't do it over the phone. Don't do it via text. Don't do it via email. Email might be okay, but that might be secondary. But do it in writing. I would send a certified receipt, registered letter with a self-addressed stamp envelope with a checkbox saying, yes, I'm coming back. No, I'm not coming back. Signed by your employee to document that your employee declined the offer. Now, if they don't send that form back to you, you send a letter saying, well, I haven't heard from you. I assume you don't want your job back. I'm going to assume you declined the offer. So I'm sending this letter to you. If I don't hear from you within a week or so, I'm assuming this is true. So call me, write me, whatever. So again, we don't have specific guidance on how to document this. We're waiting for that. I think we have 61 FAQs right now and about 30 interim final rules. So there's going to be more. It's going to be more fun reading. So the FTEs, even though the number might have dropped, there's no reduction in FTEs if your employee was terminated for cause. Again, if you're going to do that, document that. If you're going to do that, I highly recommending engaging a labor lawyer to make sure you dotted the I's and crossed the T's and did that correctly. So if the employee is terminated for cause, or if they resigned, or if they voluntarily requested reduction of hours, your FTE count would not go down. So document that. So if you laid off the employee, yeah, it's gonna affect your FTE calculation, but not the wages, because they're not reducing the wages. It's just the FTE calculation. So, however, if your employees are still working but took a pay cut, then that would factor in the wage reduction calculation. So two different calculations here. Don't overlap them. So the safe harbors for excluding salary and wage reductions, you've got till the date of the loan forgiveness application submitted. So if you can get it back to the former level, then you can exempt yourself from having those reductions. So, but if you did not have any reductions, you don't have to wait till December 31st to do the application. The reason I'm saying that is there's almost 5 million PPP loans out there. Do you want to be one of those 5 million when it's all hitting the fan? So you might get yourself early, maybe. Get yourself late, maybe. We'll have to figure that out. So, okay. I'm going to take a little break here because we're going to talk about loan forgiveness next. So,
Yeah, Larry, there's actually a question that's come up. This is probably a good time to answer that. So the question says, I got my PPP loan before June 5th. Does the 24-week spending rule apply, or is it the 8-week rule?
That's right. Okay. So Luna, thank you. All right. All right. So if you got your PPP loan before June the 5th, which is before the enactment of the Flexibility Act, you have a choice. You can either use the 8-week period or the 24-week period, covered period in terms of calculating your loan forgiveness. So you do have a choice here. Okay, very good. One downside of me clicking the Q&A. Oh, there we go. Clicking the Q&A was I couldn't get my thing to run here. Okay, let's go talk about loan forgiveness here. One reminder, loan forgiveness is not automatic. So you don't just sit tight and wait for a letter to come from the bank saying, hey, your loan's forgiven. No, you have to affirmatively apply in writing and follow the bank's strict specific rules on how to apply. If they say write it in red pen, do it in red pen. If they want it in blue pen, do it in blue pen. If you're submitting spreadsheets, submit the Excel file, not just a printout. So if you give them a printout and the Excel file, because they want to make sure your formulas are working right, because they're not going to sit there with an adding machine to double check your math. They're going to check the formulas on the Excel file. And so follow the rules very carefully. Now, I'm not going to recommend do it yourself when it comes to this, because this is going to be complicated. And just a little reminder here, who's going to be looking at this paperwork? It'll be the bank officer. Who are these bank officers? The same people ask you all those dumb questions when you're refinancing a mortgage, right? They're not going to understand how to read a P&L. They're not going to know how to read a Form 941 or a D9 or D9C or understand all these intricacies. They're not informed. When the loan process application opened, they were completely lost. So we need to be totally prepared and have a tight package. I'm going to explain to you why. Well, I'm going to tell you why right now. You have one shot at this. Okay? One shot at this. So you don't want to blow that one shot you have. It's not, oh, I can do a do-over. I can do a doozy, a 2Z, 3Z, or whatever. No. You have one shot at loan forgiveness. If you mess it up, you're out of luck. Okay? Do I need to say that again? You have one shot at loan forgiveness. So anyway.
So Larry, on the same subject, there's actually one more question that came up. It's just from.
Yeah, what was the question?
It says, so you're saying if I spend the 60% of the loan amount on payroll in the 24-week period, right, keep employee headcount, then it is right, 100% forgiven?
Well, we have to do the math to see if it's gonna match it. So, I'll go over some examples later on that. So we'll go over some examples. So,
okay, thank you.
Okay. So the borrowers must apply for loan forgiveness, and it varies from lender to lender because some portals are open, some are not open. Some portals are kind of easy to use, some are impossible to use. Who's the programmer, right? And when you submit your loan forgiveness application, they've got 60 days to get back to you. 60 days. So yeah, like Luna's question there, when you do the loan forgiveness application, you can use the original 8-week period or the 24-week period if you get the loan before June 5th. If you get the loan after June 5th, you're limited to the 24-week period. You have to use the 24-week period if you get the loan after June the 5th. Kind of tricky because I had some clients who ran to the front of the line, they got their loan, and of course there's a lot of mass confusion when they got it, and then they found out that they can get more because the SBA updated the eligibility rules. And I said, well, good luck with that because they got their loan at B of A. And have you tried getting a hold of someone at B of A? Have you tried? Oh, he couldn't get anybody at B of A. There's no one at the branch. For the branches that are open, you say PPP, they give you a blank stare. They don't know what you're talking about. In the old days, the larger branches always had an SBA specialist. Not anymore. It's an 800 number. So remind me to give you a secret on how to get through to them on the phone. Okay, remind me that. All right. So we talked about the.
Real quick, a couple questions then.
Yeah.
What's the difference between someone refusing to come back to work and them quitting? One doesn't seem to affect headcount while the other does.
Oh no, it doesn't. It doesn't. So if you can document that, hey, I'm sorry I laid you off because we got shut down, and I want you back. And your employee says, no, I'm not coming back. That's not going to affect your headcount. That's not going to affect your headcount. If your employee voluntarily quits, that's not going to affect your headcount. So there's no difference. There's no difference there.
And one more question. There was talk that if the PPP loan was below $150,000, it was automatically forgiven. Was that just talk?
That's talk. That's talk. So the politicians are saying that, the Treasury Secretary is saying that, but as you know, Congress hasn't passed a law yet. The HEROES Act hasn't passed. The HEROES Act haven't passed, and it's more partisan than ever. So we don't have guidance on that yet. So there's a good question. As a citizen taxpayer, me, Larry here, do I think we should have automatic loan forgiveness? I don't think so, because I don't think all those people qualify for loan forgiveness. So why are we going to give away $150K? That's a lot of money as a taxpayer, right? So I want them to work for it. The reason we're getting that push from the banks and the SBA is they don't want to do the work. The banks have made $5 billion in SBA fees. The SBA pays them a fee to issue the loan. The borrower didn't pay for it. Normally, when you're a borrower, you get an SBA loan, you pay a fee, a hefty fee, an annual hefty fee. There are no fees. The SBA pays the bank. The bank says, hey, I got my $5 billion. I don't want to do any more work. As a taxpayer, I've got an issue with that. You guys got paid $5 billion. Work a little bit, okay? That's just me talking. Sorry. Sorry for the rant, but that's just me. But anyway, I just think, if they I mean, why those people get off easy if they didn't spend it on keeping people working? You know, I have issues with that. So yeah, so back to the full-time equivalent employees. You know, you have to take a look at the 8-week period versus the 24-week period. And then we got those either February 14th to June or January to February of either 19 or 20, you know, compare the numbers. Then how do I count the FTEs? Again, this is not the law. SBA made this up. They're using a 40-hour-a-week standard to figure out a full-time employee. However, in the previous previous SBA loans for the last 40 or 50 years, they used a 30-hour week. The ACA, Affordable Care Act, uses a 30-hour week. So go figure. That's one of our wish lists. We have a list of wish lists, but they're using a 40-hour week standard. But they gave us a simplified method. So you count 1 for every employee who works 40 hours or more, and 0.5 for employees who work less than 40 hours of work. Now, this works really well for employers with a lot of employees who work less than 20 hours a week. So that would be your restaurants, your bars, and those kind of things. I don't know about your offices. So we run the numbers again, simplified method or the actual method, which gives us a better calculation. Your payroll service should be able to help you calculate that, you know, and not just give us a number. Ding, it's this number. No. It's ding, here's the number, and here's a spreadsheet explaining how we got to this calculation. So you want to make this as easy as possible for the SBA to understand this and the bank to understand this. So here's an example of a calculation of the simplified method for the FTEs. So let's say we have 13 employees. 5 work 40 hours a week. 8 work 16 hours a week. So 5 times 1 equals 5. 8 times 0.5 equals 4. So 5 plus 4 is 9 FTEs. So that's using the simplified method. And then you compare the FTEs with the comparison periods to see if it's going to reduce forgiveness or not. So got to compare the numbers to see how that works. So for some clients, if you have a lot of employees who work more than 20 hours a week, then you might want to use the actual method. So here's an example of the salary reduction. So basically, the salary is reduced 50 seconds, 8 over 52 weeks over the analyzed month if there's more than a 25% reduction in original wages. And this calculation is for using the 8-week period. You can change the numbers from the 24-week period. So in this example here, salary was $80,000, but we had to cut this person's salary to $50,000. So the 8-week period is $50,000, and the previous salary was $80,000. So you take 80,000 times 0.75, so that's a 25% amount. That's 60,000. 60,000 minus the new salary of 50 is $10,000. So 8/52 of $10,000 is $1,538. That's how much the forgiven loan is being reduced. So we'll have to run these numbers to see how much of a reduction in loan forgiveness can happen. So here's another examples of the FTEs. So let's say we have 35 employees for the 8-week period. And then we had the 20 employees for the 24-week period. And then let's say we're using the February to June amount, and we average 40 employees. So if we use the 8-week calculation, 35 divided by 40 is 87.5%. That means if we use the 8-week period, our loan forgiveness is reduced by 12.5%. However, if we use the 24-week period, that's 20 hours a week divided by 40, that's 50%. Our loan forgiveness is reduced by 50%. So that's a big deal in this example here. So that's why we got to run the numbers multiple ways to see it gives us the better result. So we got the rehire exception. So you got till now we got till December 31st to rehire your employees to reduce loan forgiveness amount. And, you know, but what if you tried, but you just can't get it? Well, you have to document that you tried, you gave job offers, and people keep refusing. So anyway, document all these situations. So speaking of documentation, what do you need to back up your loan forgiveness application? So number one is the payroll tax firms. Your payroll service should have this information. There's a button on the website, your payroll service website. When you log into it, PPP. There's a PPP tab. Underneath that, you get all these different reports. You'll need Form 941 for the payroll tax returns and the state income and unemployment tax returns, the DE9, DE9C. So that's the payroll service part. So they can help you there. So it's not just that, but you got other things to consider too. So you're asking the payroll service to run the numbers of the wages for the 24-week period, the 8-week period, and there's multiple reports. You can get all kinds of reports. They're going to move the numbers around to see how they work out. Also, the payroll service should be able to exclude the income for the employees that are over 100,000. So you got people who are paid over 100,000. Only the first 100,000 counts. Or if you have employees who work outside the United States, they don't count either. So all this data should be on your payroll service. And then with so you got to work closely with your payroll service here. Hopefully they'll have a PPP specialist to help you get these reports for the full-time equivalents. So they'll give you a report with that, with a backup to that, to figure out the FTEs for those different periods. Now, okay, we got the payroll, right? That's from the payroll service. The payroll service might not have these other numbers. Group health care benefits. So include the employer's payments for the health care benefits during that covered period. That includes the employees and the company owners. Don't include the amounts that the employees paid. So if there's a portion that the employees paid for dependents or themselves, don't count those. Retirement plans is whatever you as the employer pay on behalf of the employees and the company owners, but don't include their withholding, such as a 401k contributions. That doesn't count. So documentation, the bank statements, the canceled checks, receipts, invoices, just to back up your numbers there, right? For the lease agreement, the CAM reconciliation, because a canceled check for the payments to the landlord is not necessarily accurate because you might be paying some CAM costs in there. Only the lease qualifies. Utility payments, include your utility bills. And also the SBA says we can also include gasoline for business vehicles. So if you're in a business where you have business vehicles, you deliver stuff or whatever, that gasoline counts. Home office, if you're working out of your home, we don't have official guidance on this yet, but a lot of tax commentators think we can include home office expenses. That's only if you had a Form 8829, which is the home office form for 2019. Submit a copy of that and attach the documentation that backs up those expenses: mortgage, rent, utility payments. So if you're a sole proprietor, the documentation the SBA wants is a copy of the Schedule C. Now, talk to your tax advisor and also requesting the account transcript that shows that the number on your Schedule C matches to what's on the IRS computer. So that'll be incredibly helpful. What we're trying to do is cut down the number of steps the banker has to do. The less work he has to do, the better chances you get loan forgiveness. The more work you make him do, you'll frustrate him. It's easier for him to say no. So the payroll, documentation, the canceled checks, receipts, and all those kind of things. All right, so let's talk about the loan forgiveness application itself, the Form 3508, SBA 3508. So part one is the PPP loan forgiveness calculation form. That's the first page. The second page is representations and certifications. Hopefully you can answer them correctly. The next page is Schedule A, and then the Schedule A worksheet. That's for calculating the reductions of salary, reductions of headcount, and then the borrower demographics is optional, and then the 7 pages of instructions. So you can download the latest copy of this form from the SBA website because I'm expecting changes. The copy I have here is good as of, well, it's the latest version of June 16th. I don't know when they're going to give us another one, but it's certainly, I'm sure it'll make the news. But, you fill in your loan number. Most of the stuff will be online through a portal, but I would print this form out and use it as a worksheet so I can fill it out. So when it comes time to inputting on the computer, it'd be a whole lot easier because you got to make sure you get all your numbers, your loan number from the SBA, the bank loan number, those are going to be different numbers. And if you have idle loans, the advance that you got and the application number and all that. And then your payroll, your covered period, your payroll costs, and then all these other expenses, business mortgage interest, business rent, business utility payments. So we have a number here, but you're going to have a spreadsheet backing up all those numbers. What you don't want to do is turn in a one-page form. You don't just give this to the bank with no backup. How are they going to believe you, right? You just fill this out with numbers on it. Trust me. No. This is the top sheet, and all the backup will be below it, and it'll be very easy to follow. A good tax professional is an expert at doing that, because tax professionals, we're experts at doing complex forms. That's what we do for a living. We're also experts at documenting expenses. That's what we're experts at doing, because we represent clients in audits. This is basically an audit file. So we want to be able to do that. Here's the certifications, and you can read the middle one here, where there could be imprisonment of 30 years or $1 million fine if you're lying on this form. So pretty serious stuff. Schedule A is the worksheet for reductions of salary or headcount. That's where it gets complicated. And then here's the detail to that. For most of my clients, we're not going to fill this out. I'm usually going to say see attached, or hopefully the payroll service has given us a spreadsheet and we don't have to redo it. So that'll be helpful. Very, very, very complicated. So you got to be very careful about that. Demographic information and some instructions. So the EZ form, who can use that? That's a simpler form, fewer calculations, less documentation. It's for if you're self-employed, you have no employees, or if you didn't have a reduction of salaries or wages by more than 25%, or you didn't have any reductions of business. Basically, a very clean, straightforward situation. Think of it as the 3508 without the Schedule A. So there's more white space here. It's a little bit easier. There's fewer boxes to fill out, and no reduction of payroll or those kind of things. So that should be easy. Certifications are the same. That doesn't change. Just because it's the easy form doesn't mean the certifications change. All right. Let's go over an example of loan forgiveness. This is the 8-week calculation because it's before Flexibility Act. So let's say we borrow $100,000 on April 10th. Over the 8-week period, we spent $50,000 on payroll, $40,000 on rent and utilities. The loan forgiveness is $66,000. The way we get that is 50,000 divided by 0.75. That's 66,000. So under the old rules here, under the 8-week period, we're still going to owe $33,000. Here we have the same set of facts, but instead we're using the new law. The new law is over 24 weeks. I didn't change the numbers. I kept the numbers the same. So it'll be 50,000 divided by 0.6 instead of by 0.75. So the loan forgiveness is 83,333. So not 100% loan forgiveness here. So you're still going to owe $16,000 over 5 years. So the payment comes up to $285 a month. All right. So let's say this is for someone else who, did I hit the return button? Okay. We borrowed $100,000 over 24 weeks. 24 weeks, we spent $150,000. Well, this is pretty easy. Your payroll's $150, your loan's $100, so you spent more in that 24 weeks than the loan, obviously way more than 60%. The loan's completely forgiven. So the Flexibility Act did not change the amount that can be borrowed, just the loan forgiveness. So what if you're self-employed? If you're self-employed before the Flexibility Act, it was mathematically impossible to get loan forgiveness. So the maximum loan you get is $20,833. Your loan forgiveness is $15,384. So you're going to owe $5,400 no matter what. However, after the Flexibility Act, now you get 100% loan forgiveness. So for self-employed, maximum is $20,833. You will automatically get the loan forgiveness. You still have to apply. But if it's just you, self-employed, no employees, this is probably the easiest way of getting loan forgiveness. So we got some recent guidance from the SBA. They issued another new interim final rule. So maximum forgiveness per person for the 8-week period is $15,385. The maximum forgiveness for the 24-week period is $46,154. For self-employed, it's limited to 2.5 months worth of 2019 net profit. Maximum is $20,833. And when this rule came out, they reiterated that the deadline was June 30th. However, they got overruled. It got extended to August the 8th. Yeah, till August the 8th. Here's the most controversial part, that those fine print certification. So, the question is, can you certify that in good faith, current economic uncertainty make the loan necessary to support your ongoing operations? So, for some very well-heeled people, do they really have a loan that's necessary and all that? That's a good certification question, which is a lot of people return their PPP loans. And there was like a May 5th deadline to do that without any repercussions, without any further investigation. We're past that now. You can still pay it back, but you still might be subject to an audit. And we'll talk about audits in just a second. You certified the money was used to retain workers and to pay mortgage, lease, and utility payments. That's the permissible use. And you didn't get another loan, and that you'll provide the appropriate paperwork. Everything you say is true and accurate. If you make any false statements, punishable by law. And that the tax information is identical to what the IRS has, which is why I highly recommend including a transcript. Your tax advisor should be able to crank that out for you. And you understand, acknowledge, agree that the lender will share the information with the SBA and the SBA Office of Inspector General. They're the enforcement people. So the question is, I think I got loan forgiveness. I think I qualify for loan forgiveness. Should I apply now? Well, that's a good question. The forms are still not updated yet. Congress is still debating COVID relief. They still haven't figured that out yet. Is there going to be a second round of PPP? Is there going to be automatic loan forgiveness? That 150,000, 100,000, 50,000, 25,000? We don't know. There's going to be more FAQs, more interim final rules. And this portal wasn't ready until August 10th. So, but I haven't seen any of the banks yet. So if any of your banks have the portal working, let me know. I'm curious. I know B of A's is not working. And then we got some recent FAQs from the SBA, and they kind of clarify some things. There's nothing groundbreaking in the FAQs that we got. These are reiterations from the FAQs. It just basically says that the loans are due 10 months after the covered period if you have any unforgiven amount. No payments are due until the bank got their money from the SBA, but the interest still accrues from the date of disbursement to when the forgiveness is given. And the costs incurred prior to the cover period but paid during the cover period qualify for forgiveness. So there's some bookkeeping accounting issues there. Payroll costs include all forms of cost, cash compensation. Doesn't matter what you call it, bonus, commission, whatever. The SBA doesn't care. Payroll costs are payroll costs. And if forgiveness doesn't apply to retirement or healthcare benefits that are accelerated in the cover period. So you can't push expenses up to boost those numbers. It's got to be proportional to what it was. So no front loading or whatever. Vision and dental benefits, including healthcare benefits, are included for the payroll costs. So they clarified that. The next point. This is some unhappy people, but if you got the EIDL advance, the $10,000, the $1,000 per person grant, well, that's subtracted from the loan forgiveness, so you're still going to owe that. So if you got the $10,000, you're still going to owe $10,000. So that's how that works. It's got to be paid over 2 years or 5 years. 2 years if you get the loan before February 5th, 5 years if you get the loan after February 5th. Did I say February? June 5th. Sorry about that. The lease you got before February 15th, but expired and you renew, that counts. That still counts. And part of your utility expenses also include distribution of transportation. It includes transportation, utility fees assessed by state and local governments. That's part of the utility cost, which is eligible for loan forgiveness. And here's the link to the loan forgiveness FAQs. Okay. So the review process, the SBA has, the bank has 60 days to review your application and forward to the SBA. The SBA has 90 days to review the application. So you're not going to know for possibly 5 months, right? So the latest you can apply would be October of 21. So 5 months from October of 21 is what? February, March of 22. All right, so, that could be a problem. The SBA says they will audit all loans over $2 million. So you've got a loan for more than $2 million, it's going to be audited. They haven't given us some details on how that's going to work. Also, they reserve the right to review any loan. Doesn't matter what the size is. They reserve that right. So, just because your loan might be automatically forgiven, I still would do the paperwork. Okay, we just got this last week in terms of some guidance because I had no idea what the appeals process is. Now we know. So in terms of appeals process, so let's say the bank says no, the SBA says no. Well, the appeals process goes to the SBA's Office of Hearings and Appeals. So it's got to be done within 30 days of notice from the lender, and the lender forwards it to the SBA. So you got 30 days. So don't sit on it. Don't wait on it. And the SBA has discretion whether they would review or not. They can say, nah, we're not going to do it. They have the right to do that. So this is why I'm saying you have one shot at loan forgiveness. Don't expect to take advantage of this appeals process, all right? One shot. All right, there's 4 decisions that can be appealed. 4. There could be other decisions that you cannot appeal. 1, if they find that you're ineligible for a PPP loan. So if you're ineligible for a PPP loan, you're not going to get loan forgiveness, or you're ineligible for the amount that you got. So let's say the bank gave you $1 million loan, but you're only eligible for a $200,000 loan. Well, your loan forgiveness is not going to be for $1 million. Or you used the money for ineligible purposes. You bought that Lamborghini. You bought that ring. You paid child support with it. No. Or the SBA says, or the bank says, the bill is ineligible for full or partial loan forgiveness. So those are the decisions you can appeal. Here's the link to the appeals process. It tells us what information to be included. It's a really detailed list. Where you filed the petition, where, timelines for providing records, and guess what? Who's going to review your appeal? It's not just some SBA officer. It's not going to be some lowly clerk. It's going to be an administrative law judge. Yeah, you're right. Someone wearing a black gown. It's an administrative law judge. That's who's going to review this process. So it's a judicial process. It's not that simple. So here's the thing. You got to be represented by a lawyer. Only lawyers can do this. So they're cutting us tax guys out because we can represent taxpayers before the IRS because we're authorized to do that. We represent our clients before the IRS. Not a problem. It doesn't get carried over to the SBA. Most lawyers don't understand these rules. Most lawyers don't know how to do the appeal. Us accountants, we know how to do it. So most likely you have to hire a lawyer and have us as the second chair to do the appeal. And guess what? Look at this. Maximum length of appeal petition is 20 pages. Can you do it in 20 pages? I don't know. So what this is telling me is you have one shot. The SBA can say no to every appeal. So one shot. Get it right the first time. Don't do it yourself. Or take a shot. Have it reviewed by a qualified tax professional, CPA or EA, who has experience with representing people before the IRS. We are experts on this. So anyway, I just hate to see articles coming up later this year, next year, or in 22 about all these taxpayers who got denials, right? And then they're going to complain. They're going to complain to their Congress members. They're going to be whining on TV. I don't want them to be you. All right. So there's been a lot of stories in the press lately. There's 2 more. If you're linked with me on LinkedIn, I shared a couple of articles. It's not here. One was from yesterday. It was a young man from Taiwan, 24 years old. He managed to get a $3 million PPP loan, 24 years old. He's a serial entrepreneur, right? 24-year-old serial entrepreneur. He got arrested and he fabricated all his information, and that's a bad thing. So this is the first one. The first one was in Rhode Island. 2 men in Rhode Island got $550,000 in PPP loans. They had no employees. They had no restaurants. So they're charged with conspiracy to make false statements, conspiracy to commit bank fraud. These are federal charges. It's not your local charges or county or state. It's a federal crime. Very serious. Prosecuted in the federal courts. Big deal. This one's a hip hop artist. He's got a reality show on TV. I didn't put his name here, but you can look it up. I think my kids know who it is. I have no idea who this guy is. He got a $2 million PPP loan. He made up the employees. He made up the trucking company, and he spent the money on a Rolls Royce, child support, a Rolex presidential watch, a diamond bracelet, and a 73 carat diamond ring for himself. And when the Department of Justice agents arrested him, they found $80,000 in cash and $9,400 in his pockets. There's an engineer in Texas. He got $13 million for a non-existent LLC. He got busted because he said he had 250 people. The Texas version of the EDD, the Texas Workforce Commission, said there's no payroll. He has no payroll account. So he got busted by that. So moral of the story, keep good documentation on a loan application, how the funds were spent. We're going to see more of these cases make the news because they're cautionary tales to make sure you're spending money in the right places. So it's kind of entertaining, especially if it's someone you've heard of. So it's kind of interesting. So if you have leftover money, that's not going to be forgivable, of course. So what are your choices? You can either spend it on stuff you need, and it becomes a loan you have to pay back, either 2 years or 5 years, or give it back, pay off the loan. So you have some choices of the leftover money. So here's the example of when you have to start repayment. So let's say you get the loan on June 25th of 2020. The 24-week period ends on December 10th of 2020. So you've got the loan after or later. The latest is December 31st of 20. He's got till October 10th of 21, which is 10 months from June 25th of 20, to submit the forgiveness application. So let's say you didn't get around to doing it. So you owe the loan, and so the payments are due starting October 10th, 21. So you got to pay attention to when that's due. Is the bank going to be on top of it? I don't know. I don't know how good their systems are. And you could be in default if you don't pay. So you might say, well, I never got a invoice or a coupon book or whatever. The onus is on you, the borrower. July the 6th, under pressure from members of Congress and the public, the SBA released borrower information and of course, investigative reporters. Who got the money? So if you're bored, you can look up those articles. I think in our local Chronicle, Kathleen Pender probably pointed out some local notable borrowers. And they had their names, addresses, what kind of business they're in, how much the loan was, or who lent them the money. So just remember, if you get a PPP loan, it's not private, So if do your customers have confidence in you? This is what I tell my financial planners. Like, do you really want to tell your customers or your clients that you're in financial distress, which is why you got the EIDL loan, which is why you got the PPP loan? Do I have confidence in a financial planner who took a PPP loan? I would have concerns about that, or ethical concerns about that. Full disclosure, I did not do it. I know some CPAs have, but I didn't do it. So anyway, what's going to happen? Good question. Is there going to be another round of PPP loans? They're talking about it. Congress is talking about it. They're talking about additional funding for necessary expenses, but they got to tighten up on the prevention of fraud, waste, and abuse. And minority outreach is a big problem. 12% of the Black and Latino business owners were turned down, so or actually got the loan. So it's kind of a small number. Or the EIDL program, just $200 billion available. Question about automatic loan forgiveness. 86% or 87% of the loans are under $150K, which only represents 26% of the loan dollar amount. So, 80% of the loans were under $100K. 2/3 of the loans are under $50K. Only 0.6 of the loans are over $2 million. So good question. Are we going to have automatic loan for it? Are we going to count on it? I don't know until the legislation passes. So even if you have automatic loan forgiveness, you're still required to keep your documentation. I would still do the loan forgiveness application, even if you have automatic loan forgiveness, just in case the SBA decides to audit you. They have the right to do that. Even if there's automatic loan forgiveness, they can't do that. If you're bored, if you have friends who are looking for work, go to the usjobs.gov website. There's a lot of job openings. They're looking for hundreds of people who have some financial expertise to be one of those auditors. PPP 2.0. So this is what they're looking at is use the money to improve your HVAC system. What is that? The negative pressure thing. So you're not blowing viruses from one room to the other, I guess, or aerosol or whatever. Buying masks. Hey, it's $15 a box now at Costco. My first box, I paid $40 for it. Because that's all I could find. Plexiglass shields. I'm sure many of you have bought those. Your front desk or your hygienist or whatever. If you're a restaurant, outdoor seating to encourage social distancing, and they want to only open it to businesses with less than 300 employees. Some requirements are revenue declined by 50% or more. The Democratic version says 100 employees or less. So we'll see. There's a couple of agreements. There's a couple of disagreements. Hopefully Congress will work out this. Other use of funds is we're upgrading our human resource systems, upgrading our accounting systems because a lot of the people were woefully unprepared to do the documentation because they didn't have an accounting system. So that's important. Or costs related to recent social unrest. You're vandalized. Your windows were broken in. Your insurance doesn't cover it. Those expenses. Other part of PPP 2.0 is set aside for the smaller employees, 10 employees or less, $25 billion. Trying to help our small business stay in there. I don't know why they didn't do this sooner. No publicly traded companies, no financial services companies, no entities affiliated with the entities in the People's Republic of China. And the loan sizes are now 2 million instead of 10 million. And the 60-40 rule still applies. 60% of payroll, 40% of everything else. But the everything else has been expanded. So this is not law yet. This is just discussion being talked about. Keep it on the news. We'll see if PPP 2.0 passes. All right. What are the considerations do we need to consider? Besides PPP, well, there's the EIDL loans, economic injury disaster loans. There's the Main Street lending program. That's through the Federal Reserve. Take a look at that. If you're a self-employed, solo practitioner, maybe unemployment benefits instead. Self-employed now get unemployment. First time in history. Taking advantage of employer credits for paying sick leave, family leave. The employer retention credit, maybe that's worth more than the PPP. If you have a loss, net operating loss, or carrybacks are allowed. That was stopped with the Tax Cut and Jobs Act. KIP, qualified improvement property. You spent money improving your commercial property. There's a typo in the tax law that says instead of getting a full write-off, you have to take it over 39 years. So the CARES Act fixed that, which applies for 2018 and 2019. So it could be worth a big deduction. So that can be helping boosting your cash flow. So for the EIDLs, there's about $367 billion for small business. They're low interest loans. No more grants. No more grants. The employee retention credit, you keep your employees. It's up to $5,000 per employee, but you can't do this and the PPP loan. Payroll tax deferral. Anybody can do that now. You can defer the employer portion of the Social Security taxes. So you can pay it back by December 31st of 21 and December 31st of 22. And of course, to add further confusion, our dear president has issued an executive order that takes into effect September 1st about the payroll tax deferral for the employee portion. Is it legal? I don't know. Stay tuned on that. All right, Main Street lending. Go to the SBA website. That's through the SBA with some affiliate lenders. They're not forgivable. The interest rates vary. There's different types of loans: Main Street loan, priority loan, expanded loan facilities, all kinds of loans. And there's restrictions on how you can use the money. It can't be used to pay for the owner's compensation. It cannot be used for dividends, buying back stock, or other CARES Act provisions. So keep an eye on that. Additional relief. There's other federal relief programs, state programs, local, like in San Francisco, there's some breaks for California, for San Francisco businesses, private grants. I think there's a list of them, like Verizon has a grant, landlords. Some landlord clients are giving breaks to their commercial tenants. So all kinds of relief there. So there's some resources. I would suggest going to the SBA website because some of these links might not work because they're always changing them. So the minute I put them in, they might have changed them. So um, my earlier presentation was to tax people. Here's some places where you can find me giving further webinars. Oh boy, we went through a lot of stuff here. So thank you for your time. I'm going to stop sharing my screen here and take a look at what other questions we have. Any Q&As or any chats here?
No other questions have come through that I can see, but now that you've got Larry's full attention, anybody want to type in a message there in the Q&A or chat?
So you are saying if I spend the 60% of the loan amount on payroll in a 24-week period and keep employee head count, then it is 100% forgiven. Yeah, that looks like that. Yeah, so you spend at least 60% on payroll, and that number happens to exceed the loan you have. So you have to compare. Like the example I had earlier about I had 100 grand payroll divided by 0.6. If that number is more than your loan, yeah, you have 100% loan forgiveness. So that's how that works. Okay. Let's see. I think we talked about all this stuff here. There was talk, talk about the PPP loan. Yeah, that's talk. There's just talk, and and our Congresswoman Jackie Spear, she says all kinds of things, but hey, it's not there until the law is written. So anyway,
Well, what I've taken away from this presentation is that this is not a simple do-it-yourself type of task. It re-emphasizes the philosophy that Larry and I both share, that every successful family and business owner should have a team that's helping them. And that includes their payroll provider, that includes their CPA, that includes their financial planner, includes their lender, it includes their realtor potentially. And if ever there was a time that need for that bench, the financial bench, is being shown, this is it. So there's another question that just came up. Max pension is 2.5 times last year's monthly average?
So max pension, this is for not the employees. This is for the owners. This is for the owners. So in terms of calculating the payroll costs, the maximum pension is 2.5% of last year's monthly onset, so over the coverage period. So yeah, so what you can't do is write a great big check to pay out more than the average amount to get the payroll number up. So yeah, so we got to look out for that. Leela's got a question here. Did you say idle is not forgivable? Yeah, so no, idle loans were never forgivable, and they're pretty tricky. I mean, they were never forgivable, but there was that grant, that so-called free money they were handing out there, but very few people actually got it in the real world. So so if you got a $10,000 idle grant, and you got that, and what happens, you got the PPP loan after you got the idle loan, your idle loan has been refinanced by the PPP. So if you got the $10,000 grant, that's subtracted from the loan forgiveness. So you're still going to owe money on that $10,000 that you got as a grant. So that was just given to us just a week ago or two. So this stuff is evolving. It's constantly changing. So stuff you heard earlier, we just got to be careful. Got to review the information and the issue we're getting. So if your PP loan is $20,000, is it forgiven? Well, that's a good question. It depends if you're self-employed or not. If you're self-employed and your income's over $100,000 and you have no employees, yeah, you should get 100% loan forgiveness. So that one's to me, it's the closest to a no-brainer in this environment that we have.
So Larry, one of the things that you said that I didn't quite follow was about the PPP loan being forgiven is not going to be taxable on the federal level. It remains to be seen if it's going to be taxable at the state level. But if I used a portion of that $100,000 for expenses, the expenses that I use that for are now no longer deductible expenses. So doesn't that effectively make the amount that was used for that expenses taxable?
Tom, you're so smart. So under the current rules that we know right now, let's talk about two things here. We're talking about the federal taxes and your state taxes. Let's talk about the federal taxes first. I need to get a sip of water. I'm running dry here. Hold on for a second. Okay, I'm running dry, so I need to get a little. I need to wet myself. Wet my throat here. So just give me a second. Okay, so let's talk about the federal here. So let's say I got a $100,000 PPP loan, and I use that whole $100,000 on payroll. So I qualify for a $100,000 loan forgives. That's the easiest scenario.
Yeah, that one makes sense to me.
All right. Under the current law, according to the IRS, according to the CARES Act, that $100,000 loan forgiveness is not taxable. Normally, when you have debt forgiveness, it's taxable unless the law says it's not. You know, you had a credit card forgiven, that's taxable. You get a 1099-C, or you had a mortgage forgiven or something like that. That's taxable unless the law says it's not. So for the PPP loan, I get my $100,000 loan. It's completely forgiven. So it's tax-free for the federal purposes here. Then we look at the expense side of things. So that's $100,000 of payroll. Currently, under IRS Notice 2020-23 says that $100,000 of your payroll is not deductible. So let's say my payroll is $250,000. My deduction for payroll is going to be 250 minus 100. I can only deduct $150,000 of payroll. That's the federal calculation. California, on the other hand, that $100,000 loan forgiveness is now taxable. We think that, of course, we're going to wait for official guidance, that for California purposes, because you're paying tax on $100,000, you should be able to deduct the $100,000 for payroll. But doing taxes next year is going to be a whole lot of fun. To make it even more confusing, this is for 2020, but we don't get loan forgiveness until 2021, but the expenses were spent last year. Very confusing, So we don't have official guidance on the mechanics here. So we're waiting for guidance and, see what happens here.
Thank you. There's another question here. Can you read that one in the comments?
Yeah, from Ron, right? If money's received by CA for unemployment by a sole proprietor, how does this affect loan forgiveness? You're not supposed to. You're not supposed to get unemployment and a PPP loan. That's prohibited. So that's a problem. That's a problem, right? So, and the thing is, the EDD computer, remember, it's 40 years old. It's programmed in COBOL. It's not connected to the internet. So there's no information sharing between the EDD or any of the state unemployment computers with the SBA computers. So how would they know? They'll probably know if there's an audit or you get turned in by an employee, a whistleblower or something like that. So that's an ethical question. That's an ethical question, right? So you weren't allowed to have both of them. So the question is, do I return the unemployment money or do I return my PPP loan? You got to figure out, did you apply for the unemployment in bad faith or whatever? You have to talk to someone about that regarding the ethical issues of that, of knowingly getting things that you're not allowed to get. So
okay. Any other further questions? Otherwise, we can wrap this up.
Yeah. Wow. It's 8:30 already. The time went pretty fast. So thank you for your attention. Thank you for your time. Love to talk to you guys again, especially if we got some more guidance, especially I'm working on a presentation on the Biden tax plan versus the Trump tax plan. The Republican convention is next week, so we'll see what their tax platform looks like. The Democratic tax platform is coming out, and be a very interesting conversation. So stay buckled in. So,
well, Larry, thank you so much. I know that you've been doing a lot of these presentations, and you're a very busy professional here. But this group really needs your help, and we really appreciate it.
All right. Well, thank you for your time. Thank you, Tom. And thank you, Jim. Thank you very much. Good job.
We'll all be in touch.
Okay, very good. Have a good evening. Okay, good night. Okay, bye-bye.